Hello and welcome to Startup Street. I'm Arundathi Ramanan, and joining me from the Delhi studio is Aishwarya Anand. These are the top headlines from the startup world. Nykaa appoints a new CFO and CTO while announcing the addition of several new senior hires to top management, which will now comprise over 50 leaders. The new appointments come after 5 senior executives exited the fashion and beauty e-commerce platform in 2022.
UIDAI and NPCI plan to set up an aggregator platform for Aadhaar-linked eKYC in a move to make online lending easier and safer in India, says report. Set to be launched the next few months, several NBFCs, fintech players and online insurers to benefit.
MapMyIndia registers a 23% jump in consolidated profit at 107 crore rupees in FY23 over the previous fiscal. Revenue surges 40% at 280 crore rupees as the geotech company added 250 new clients in the year gone by, taking its client base to over 850 companies.
Real-Time Angel Fund announces the second close of its early-stage fund at 125 crore, which marks an increase in fund size to 510 crore since inception. About 7 months ago, the Angel Fund has invested in 10 startups.
The Delhi High Court orders Competition Commission of India to look into complaints made by Alliance of Digital India Foundation against Google's user choice billing system before it comes into effect on the 26th of April. ADIF represents Paytm, MapMyIndia and others.
Meanwhile, Google parent Alphabet CEO Sundar Pichai's salary has become a touchy topic after he got a total compensation of about $226 million in 2022, more than 800 times the median employee's pay. Remember, Google has also been cutting jobs globally.
Those are the headlines that we're tracking for you this evening. And on the hot seat, video editing SaaS platform VideoVerse has acquired Really.AI, a US-based esports AI-powered content creation company. Now, the move was made in a bid to enhance VideoVerse's offerings to its customers in the gaming industry. Really.AI is known for its AI technology tailored to gamers and streamers that automates the editing process, streamlines video content creation, and aids in crafting more engaging content. Joining us now to discuss the acquisition and the growth roadmap is Vinayak Shrivastava, the co-founder and CEO of VideoVerse, and also with me, Aishwarya. Vinayak, thank you so much for joining us on the show today. Really.AI is the first acquisition you've made since your inception. What makes Really an interesting buy for you?
I think it kind of became very interesting for us when we met them first back in 2022 was the way the team was positioned. They were solving an interesting problem, which was inclining towards what we were doing, and also at the same time unlocking a new use case and an opportunity. Back at VideoVerse, obviously, with Magnify and Illusto, we have expanded the video editing offerings in the enterprise segment, but really unlocks the next bit of use case for us, which is in the e-gaming, and we feel that that's a market that's just about to kind of get started.
Okay, so the market is about to get started. Now, could you also tell us that how big is Really? Take us through its business model, top markets, revenues, and growth potential.
So Really is currently in its early stage of revenue. It's currently at a stage where it has few early customers. We have acquired it very strategically to kind of grow our offerings. A lot of our customer bases overlap with Really. So we have already started acquiring customers in the e-gaming space. Currently, the growth plans for Really is fairly simple. Obviously, while we continuously keep doubling down on the use cases within the e-gaming, the idea is also to kind of launch all the Twitch plugins and the Facebook plugins that we have been working for the last 2 quarters with the Really team, so that it becomes more of a prosumer offering as well. At the same time, has an enterprise angle to it, which means that we intend to sell it to all the e-gaming studios and e-gaming platforms, simultaneously open it up to individual content creators that stream e-gaming content online.
Right. So now you've raised $47 million last year. Talk to us about where that money has gone. Will inorganic growth be a big part of the strategy? Also, any more fundraisers planned?
Currently, no fundraisers planned.
Okay.
We have been profitable for almost 18 months now. The idea with the money is obviously to look at some of these inorganic opportunities. The way we look at the landscape is that media as a horizontal bed has a lot of offerings, and how much of it can we start kind of inorganically acquiring over the next few quarters or maybe the next few years to start building these offerings and start creating like a plethora of options for the media companies that we work with. I think that's going to be the focus area with the money we have raised, and obviously enhancing the AI piece of it is going to be at the heart of it.
Okay, so acquisitions are definitely on the cards. Now, let's talk a little bit about VideoVerse's financials. What kind of revenues have you clocked in FY23? What are your targets for this year? And are you profitable yet?
We are profitable already. We have grown almost 300% compared to where we were last year in terms of our overall top lines. We ended up launching a new product called as Elasto, heavily invested in research centers. We have established a research center in Israel as well. We have put a product team together based out of London. While we're in conversation, we're also actively looking at different geographies while we're continuously doubling down on the AI and ML talent within India itself. And we are making sure that at least where we are by the Q3 end, we are positioned well enough in terms of just getting a little bit of market share in the e-gaming space. Been very aggressive in growing our footprint, especially in the European countries, and now obviously in the US area. Also with Reely's acquisition, it opens up a new perspective for us, and obviously a lot more people added into the team in terms of just overall growing in the US market.
Right, so pushing the European and US markets, and you're already profitable. Now, demand for AI continues to grow across sectors. And like you said, gaming and esports is at the forefront of this revolution, and you're trying to win a pie of this as well. So talk to us about how big this opportunity really is. How are you building your armory in this space?
So honestly, the future of video creation has expected to be significantly impacted by the advancements of AI and ML. And these technologies can automate a bunch of tasks that is involved in video production, such as editing, captioning, sound mixing. And it kind of also reduces the workload for video creators. And what's important here for all of us to understand is with the help of AI and ML algorithms, creators can analyze viewer behavior and preferences, which can assist them in making more informed decisions about content creation and distribution. And AI and ML has the ability to kind of identify trending topics and keywords. Now, if you cut over to the video space very significantly where we are operating, right, we use AI ML to kind of automate the workflow processes, which is edit the content on the fly, remove the human element, and also efficiently kind of publish the content. Moreover, AI and ML can basically enhance the video quality and at the same time kind of the quantity also that you're creating. Consequently, the AI and ML are set to kind of revolutionize a bunch of your video editing process over the years, but we significantly feel that a personalization piece to it where viewers can be engaged is going to be a very important factor. And I think that's where our focus is as Videobus. We want to continuously keep ensuring that a lot of these pipelines that are there while your video editing starts getting automated over a period of time, specifically for the enterprise, because that's where our core is. We are solving it for the enterprise, while we do understand that there's a long tail of problem statements to address for the prosumer market, but enterprise is where we actually are moving the needle today.
All right. Now, Vinayak, staying with technology, could you share some insights on how AI-driven content creation and distribution is changing how business is being done? Also, what kind of guardrails are needed as we adopt AI across the board?
Interestingly, no matter what you do, right now, the way AI is changing the entire landscape across not only our industry, any industry, it's very hard to kind of say that, over a period of time, how much of it will be protected versus kind of, becoming a commodity. The way we look at AI and ML, right, specifically is what kind of problem statement it is solving within the video space. Now, for a use case around where our customers are specifically focused right now on the OTT side, the broadcaster side, sports teams, sports leagues, we enable AI to kind of use a bunch of NLP modules, to use vision modules or OCR to kind of understand where the content is headed, which means that analyze the content to attract viewers by defining interesting key moments, which is able to kind of do it automatically. You don't need any video editor to do it anymore, which will enhance the way video can be captured and also kind of created for the audiences to view it. Interestingly, the problem statement we are solving has greater implications when it is in live, because time to market and efficiency is all that matters. The modules that we have been creating has been very specific to the use cases in the sports and entertainment domain. With Really, obviously, we are getting into the e-gaming domain as well. But the way we have protected ourselves is just by kind of creating this loop continuously where we are auto-training the data sets over a period of time to kind of just enhancing the module, because the module today that we have created has a protection in terms of the absolute amount of content creation that it can do, which means that it can identify content even without any of the other modules that I'm talking about. It does not need a third-party data set. And I think that is what has advanced more on the video side more than anything else over the years for us.
All right, Vinayak, we're completely out of time. Thank you so much for joining us on the show, and we wish you all the best going forward.
Thank you.
Moving on, India's deep tech startups need higher seed and early stage funding to grow faster, as only 11% of technology-related funds have reached this ecosystem as of now, says NASSCOM. Bharat Innovation Fund is one of the handful of deep tech-focused venture capital funds. And here's a slice of the conversation on opportunities, dry powder, and the new fund with co-founder and partner Aishwarya Raguraman. I want to begin by asking you that what do you think of ChatGPT? Have you tried it yet? And before he answers this question, I want to tell my viewers why I'm asking him this question. That's because Bharat Innovation Fund primarily invests in AI-driven startups. So what do you think of it?
No, it's going to disrupt the world for sure. How much is it going to disrupt the world and when is it going to disrupt the world? I think the jury is still out. It's created a lot of buzz, but for us, when we look at technologies like this, we understand there's a time to maturation and there's a time to adoption. And while people are going gaga over it, I think to become truly commercial and a product that is adopted across various use cases is going to take some amount of training of the algorithms and therefore usage to train. And just to tell you this, we actually invested in a natural language generation company a few years back, so we think we're going to get disrupted by ChatGPT.
Now, Ashwin, the first investment that you made was in 2018, right? And a lot has changed in the past 5 years. Now, with the coming of generative AI, how do you see it impacting the AI startups in India in the next 5 years?
So I think what's going to happen with a lot of the AI startups, everybody is working in a different space. Everybody is working with a different use case. And there's so much to go in the AI world in terms of the use case. I mean, we've just scratched the surface. So if you think of generative AI, I think it's going to become a little bit more like digital, which is there are many startups in the AI world which will leverage GAN, which will use that within their solutions. And so it will become a part or embedded into enhancing other solutions and other use cases that some of our startups are already working on.
All right. Now you've made close to 18 investments in deep tech and breakthrough innovations across India. So could you give us a sense of your portfolio companies and also tell us what is your investment philosophy behind, backing them?
Yeah. So we realized that there's not, let me answer the second question first. We realized there's not too many players backing deep tech startups out of India. And we moved as a startup ecosystem from consumer-focused startups to SaaS. But you now want differentiated SaaS, right? You want guys who are different, who have a product-first approach, who have technology as a moat. But there wasn't enough capital to go out there and, get to these startups, invest in them, support them, and take them ahead. And so we realized, given this white space, it does take, or it makes sense to have a dedicated fund that will invest in these startups. And what we've realized is once you've invested in these startups, if they go past the valley of death and their product market fit gets established, mainstream funds, which are, a little bit the later stage generalist funds, then find them very attractive.
Now, I want to understand, are you planning to invest in some startups in 2023? What are some of the technologies your eyes? And, and in which sectors? Which sectors are you looking at?
So we are looking, we're a sector agnostic fund, so we look across sectors. I think there's going to be, and there is a lot of innovation propensity is the healthcare sector. Healthcare, but deep tech solutions are still emerging, and so we're keeping a very strong eye on that sector as a whole. Enterprise solutions, so two technology areas which could address any sector, which we are across many sectors, from digital lending to media tech and so on. We're looking at the next few. The other area where I and material, again, addressing very different use cases. Okay. It could be something in fashion. Be something a lot more serious, and we've invested in one company called Nayam, which uses your eye and enabling something which people couldn't do before, which is something called a custom.
The journey has become bit more tougher. So what is the capital pursue keeping them warm?
Yeah, I think we keep them warm, winter or not, with motivated entrepreneurs anyway, right? But I think last month, one of our companies, which we invested in the pre-Series A round, called Entropies, went on to raise a Series B round from a couple round last month in the midst of the funding winter. And the reason to spend significant amounts in customer acquisition and this on a high cash burn model, the deep tech nature of our startups means that we can be a little bit more frugal. Also turn on and turn off the tap to assist harder. It's easier to sort of throttle and not spend as much and then open out and when the environment gets better.
And moving on to the latest on Twitter and the blue tick. So confusion surrounding Twitter's blue tick subscription policy continued over the weekend after a number of high-profile accounts saw their blue ticks reinstated. Beyonce, Harry Kane, Richard Osman and Victoria Beckham are among those who got their blue ticks back. In India, legacy verified account holders such as Alia Bhatt, Virat Kohli, Shah Rukh Khan and others too got their blue ticks back. However, some celebrities who have received the blue tick back have confirmed that they did not pay for it. These include a Twitch streamer Hassan Piker, journalist and author Kara Swisher, former J&K Chief Minister Omar Abdullah, among others. It is being speculated that the label was automatically provided to accounts that cleared 1 million subscribers. Twitter has not clarified the policy, but there appear to be key exceptions. Profiles of stars like actor Ryan Reynolds still missing a blue tick he once held despite having more than 21 million followers. Chrissy Teigen with 12.8 million followers also doesn't have the blue tick when we checked last. Among organizations, curiously, Tesla too does not have a blue tick.
Now, Travis Brown, a Berlin-based software developer who is tracking these subscriptions, has tweeted that he found 110 accounts with more than 1 million followers that are not marked as blue subscribers out of a total of 9,884. He also tweeted that as of April 23, he recorded a net increase of 12,000 accounts, which is about a third of the previous week and largely accounted by Musk's decision to gift thousands of subscriptions. Meanwhile, amid the chaos, Twitter accidentally verified a fake Disney Junior account with a gold tick before suspending the account for tweeting wild content. The real Disney Junior account was later given a gold badge. Meanwhile, here is an update on a new feature that's appeared on Twitter. On some of Elon Musk's replies, you will notice a new tag of subscriber. On further investigation, we found that this new feature is for content creators to help them make money from the content they post on the platform. When someone has a subscription offering, their followers can sign up to access bonus tweets created specially for them, explains the policy. The feature is only available in the US, Canada, New Zealand and Australia for now. And with that, it's time for a break. Coming up, home interior solutions company DesignCafe recently got 40 crore rupees in a follow-up Series B funding round. How does it plan to use the funds? We check in with the company's founder to find out more. Stay tuned.
Well, home interior solutions startup DesignCafe has recently raised about $4.8 million in a follow-on Series B funding, and it plans to use this capital to expand its footprint geographically across the country for both of its brands, DesignCafe and Carpentry. Now, the startup, which was founded in 2015, is now present across 10 cities in India, and right here in Bengaluru, it has a factory for manufacturing its products in-house, which is spread over 65,000 square feet. So to talk to me about the company's journey so far and what lies ahead, joining me now is the co-founder and CEO of the company, Gita Ramanan. Tell us what distinguishes you as a startup compared to other players in the industry, and what is the kind of scale you've been able to achieve over the years?
Right. I think fundamentally it's the DNA of the company, right? So DesignCafe started by 2 architects, and that's literally how the business model has been grown or developed. So at the core of what differentiates us from everybody else is the fact that we personalize each home for every customer. So we have delivered over 10,000 homes in the last several years, and every single home would be completely unique, right? As a carry-on to this, there are space-saving solutions which offer 20% more space in a home, which most people do not know how to unlock, and we have that uniquely here at DesignCafe. Whether it's a pantry pull-out, whether it's skirting drawers, dado shutters, all of this is just really cool units that you'd like to have, but also offers an unlock space. And then the largest collection of colors, materials, finishes, which means that everybody gets the shade that they really like.
You know, from where you started, where were you in terms of revenues, in terms of profits? What kind of growth have you been seeing?
I think so. Exit March FY23, we clocked about 240 crores in ARR. And we have grown 60-70% CAGR every year, and we are poised to kind of continue that trend, which is why the follow-on round, which means that next year we should hit about 400 crores and 600 the year after.
And are you profitable yet as a company overall?
Every single store of ours is actually profitable and is throwing in money into the system. We still have burn at the corporate level, but that again in March was in the low teens, which means that first half FY25 the company should be completely profitable.
All right, you brought up that follow-on funding, and I want to talk about that. It's Series B funding, $4.8 million. You plan to use that to expand your presence. How many cities are you in currently, and what's your plan? How will you use this capital? Where will you expand to?
So we have 8 cities that we're completely operational in, but we have 16 experience centers in them. So we'd like to go deep into each city and expand our presence. This capital, though, is pegged more for technology and automation on one side, and a lot of marketing and supply chain infrastructure, right? We have a very asset-light model, the way we'd like to expand into both the east-west, which is where we're expanding next, and then eventually to the north, which is a franchisee model. So there's very little investment that is going to go in that quarter. But really, we have the best supply chain metrics in the states and the lowest costs in the whole system, right?
Sure.
And we'd like to expand and solidify and strengthen our position there.
So, you know, in terms of your newer D2C brand, which has come up, Carpentry, I wanted to talk about that as well. It's a very new brand, but what is the larger play? Why did you feel the need to start another brand? And, you know, what is the strategic role it'll play over the years when it comes to DesignCafe as a whole, as a company?
So Carpentry is something we're very excited by. We're the category leader here. In less than about 6 months, we already have 12 stores across Bangalore and Hyderabad. We have already clocked 2 million ARR just in these months. And part of the reason why we're so excited by this is, and COVID had a contributing factor, that this whole...
Why you started the brand?
Absolutely, right? That the whole aspirational market of homeowners who want their own home interiors has expanded tremendously. And something that was essentially a push from us earlier, from all the organized players, has now become a pull where customers want not just a modular kitchen, which has become the standard, but even homes that reflect what they want. Right? They're just early on in the value chain and early on in the buying journey. And they have potentially bought a home for 60 lakhs as opposed to somebody who's bought a home for 1.5 crore, right? But they still want to put in money that actually has some value and not something you're going to throw.
You know, in terms of numbers, again, your gross annual order inflows, what's that? Like you said, you've catered to about 10,000 homes so far.
Yeah.
How much are you doing monthly, and how do you plan to grow that?
Right now we have 2 factories in Bangalore, which are spread across about 65,000 square feet, which have the ability to deliver about 4,500 homes in a year. So part of that investment, I said, is going into manufacturing. We have the best quality German machinery to make sure our quality is under no concern whatsoever. So we are able to expand. We will make a significant investment here so we can expand this capacity, which will help us go into newer markets but still be profitable every single time.
Are you also looking at opening more facilities in other parts of the country, or will you just be expanding the 2 factories that you already have here in Bengaluru?
No, absolutely. We will look at more facilities, and right now with all the locations we have planned, Bangalore still feels like it's viable as a base location. But then before we get to NCR, before we go further up north, we think we're going to have to look a little more strategically at Gujarat, at Maharashtra, at a location there to open the next manufacturing facility.
All right, Geeta, we wish you all of the very best, and thank you very much for your time here again.
Thank you. Thank you for having me.